Good morning, everybody. It's Wednesday, December 4th, and we're going to start our prep for today ahead of the ADP jobs report that's going to come out. Did you see the washing machine play out again yesterday? Did you understand when it was likely for price to move down and when it was likely to mean revert, as we had laid out? Did you understand why it happened so you weren't fighting it and losing your money? If not, let's review. Just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So if we start off by looking at yesterday, the market opened, we had our big data, which was jolts at 10. We went straight down until 10:30, bounced for a little bit, and then bottomed around that noon time again. We laid this out in our weekly video. This is what happened on Monday last week ahead of FOMC on Tuesday. It's what happened on Wednesday for PCE. When nobody's protected ahead of the data, the risk becomes to the downside. Once that is taken care of and all of that risk gets removed from the market, then we mean revert. And that's exactly what we saw as we pushed up into the close. Overnight, we've been trend to the upside. Globex opened right at yesterday's volume point of control and went up since. So this gives us a good reference to pay attention to on the days ahead. From a positioning standpoint, our COT only updates once a week, so longer term commercials are short. Non-commercials, the large speculators are net short as well, with the small speculators long at a new 3-year max position. Market makers on all durations are in risk compressing mode as long as we hold 60/48. And fund managers are nearly fully invested with 98% currently in the market, leaving them about 2% of cash on the sidelines. From our flow standpoint, we have a $680 million bid today between 60/49 and 60/81. So right where market makers are risk compressing until that would change, and then right up to where we are now at 60/81. Above that, $1 billion in selling. So this area is fairly neutral. It's the tail edges that become the risk. $7.5 billion of selling if we get up to 6109 or below 61 or 6018. That is the bigger risk, is hitting one of these points, because that's going to trigger more downside pressure in the market. So if we make our move up, that's going to be resistance. If we go down, that's going to add fuel to the fire and perpetuate that. Not looking quite for that today on the downside, but this is what we look at structurally. And our last bid from our market makers begins at 60/47. Then we have one at 60/33 and final bid at 6008 before things would get very challenging for the markets. On the overall for today, in terms of flows that we're looking at just specifically for today, is we are 50% underinsured heading into ADP and then Powell this afternoon. So same thing as yesterday, expecting that to come in. We monitor that about every 10 to 20 minutes, 30 minutes during the day. We keep a close eye on that and see what's happening and when this is changing. And right now, it's showing the same signs as yesterday, that the risk is to the downside. The biggest catalyst today will likely not be ADP, but will be Powell, as traders look to the interest rate discussion. And then we are still 23% underinsured for NFP as well. That has come up a little bit, but we are still waiting on all the last minute shoppers to come in and buy their insurance in the market for NFP. And that likely won't take place until tomorrow, middle to late in the day. And again, that will be that downside pressure. So we look at those windows where that is likely to come in, because when we don't have that downside pressure, it's much easier for the market to continue its move higher. So today, in terms of so we have all of our levels, and then the trades that I am looking at today would be a long 62, 53, or at 81. So waiting for the market to give the clear setup and then getting long into this smaller bid because there is not that selling. If we make our move up to 6108, then we'll look to piggyback on that $7 billion that's going to get offered in the market and trigger to give us a little bit of a push to the downside. Overall, we're looking for rotational price action between 60.81 and 60.56 with our pivot at 60.69. Under 60.56, the pivot's 60.45 and the target is 60.35. And over 60.81, our pivot is 60.96 with a target of 61.08. Have a great day, everybody, and make sure to pay attention to when you should be interacting with the market and not stepping in front of these larger traders today.